This podcast is general in nature and hasn't taken your circumstances into account. It's important you consider your personal circumstances and speak to a financial advisor before deciding what's right for you. Any general tax information provided is provided as a guide only.
Hi everyone, hi Shane.
Hi Deanna.
And welcome to another episode of Simplifying Investing. So markets have been performing a bit better in the past week, from peak to trough. Markets fell by about 18, nearly 20% in the US, a bit lower in Australia. Now they're up by over 10% on news that Trump is negotiating with countries around the reciprocal tariffs, that those reciprocal tariffs have been pushed out for 90 days, but no signs yet that there's any resolution on the China tariffs, which are really the ones that are adding the most, I guess, to uncertainty.
But Trump keeps telling us he's talking to the Chinese.
But the Chinese say that they don't want to make a deal, so it's unclear.
So what's happening? Nothing.
It's hard to see China bending and coming up with a deal with the US. I think that they seem quite adamant that they can survive without that 14% market share.
But the White House keeps telling us that they need American consumers, that they're the ones who need the deal. I kind of wonder whether the Chinese are thinking, well, maybe it's the other way around, that you're the one who needs the deal. And you certainly get the impression from Trump that he's gotten kind of nervous. That's why he keeps backing down. He did that several weeks ago now by removing the reciprocal tariffs from above 10% or back to 10%. Of course, we're still on 10% in Australia. But it seemed to me that he'd gotten really nervous about the bond market selling off, back up in bond yield, shares getting pretty close to a bear market. Then things start recovering. Then he gets into a rant about the Fed and threatening.
But then leaves the Fed alone?
Then leaves them alone. Because I think, again, he got nervous because he saw the share market reaction. Shares fell 2-3% on the back of that rant. And then so he's had to back off. So you kind of wonder whether he's under a bit of pressure here. And
probably also under pressure from the CEOs like Amazon and the car makers, because he said that he's not going to put the tariffs on car parts anymore. He was already exempting cars that were made under USMCA, so ones that were made mostly in the US, and now he wants to exempt car parts because even the car makers in the US themselves have said that this is a bad deal for us.
Yeah.
And places like Amazon have said that they're going to, and initially they said we're going to have a separate charge in there around the impact of tariffs, although now they've gone back on that, maybe under pressure from the White House, I'm not sure, but clearly
it was a hostile move.
I think you're taking words out of the press secretary's mouth from the US.
What's her name? Carolyn Levitt. Hilarious.
So it sort of seems like this warfare between corporates and the White House as well now, whereas before it seemed like Trump was in cahoots with many of the major CEOs.
Yeah, I think he's under a lot of pressure. I mean, you did that fantastic chart on Apple, which showed the price of an iPhone would go from circa $1,000 to $1,800 just on the back of the tariffs on China.
And then more, actually, if the US was manufacturing in the US.
$2,500 or something if the US makes it, because their wage costs are way above what they are in China. And obviously, Apple would have then been very upset at seeing that, because even if they eliminate their whole margin, the price of an iPhone would still go through the roof. And of course, it's all very easy to say bring production back to the US, but then as that chart showed, you'd still be paying more for the iPhone. And you say, well, okay, we'll move it to India. Well, maybe, but that takes a while to do. And I know Apple is saying they're going to do that. But then, Trump would then start looking at India and saying, well, what are you guys doing? We're going to put the tariff on you. So it seems like that he is in a bit of a bind here. And you kind of wonder whether he thought this through in the first place. I mean, it always looked that the so-called liberation or retro date tariffs were just made up on the spot. When he came down from the top of the mountain and had those two tablets there holding the tariffs up, it sort of looked like a bit of a joke. And it turns out that the calculation was totally ridiculous. And now he's backing away. But I think he can't back all the way down. So we're still going to end up with a level of tariffs which is still a lot higher than perhaps we hoped for at the start of the year.
So probably a bit more downside still in the short term for markets. Maybe they're getting a bit too overexcited about potentially good news, but still a long way to go before any deals are negotiated.
Well, that would be my concern. It seems, one of the people we subscribe to describes downturns in markets as a bit like a bang and a whimper. You get this big bang, markets come down real hard, Then you have a bounce, and then it's quite common to have another retest, and that can be a lot quieter because the markets are still fairly weak anyway, and so it's not as big a surprise anymore. And maybe that could be the case here. You could have a retest of the lows because, the tariff issues are a long way from being resolved, particularly in relation to China. If he announces anything with Korea, Japan, and lots of other countries, it looks like it's going to be more like a understanding to have an agreement as opposed to an actual deal. So that could all flare up again. And then there's the damage that he's already done to confidence, which will flow through to what we call harder economic data and profits. So it seems to me like there's a bit of a way to go yet before we can say with confidence that we've seen the bottom.
Yeah, and some of the hard data isn't looking too positive in the US, like the GDP figures, the confidence numbers, and even the labour market shows signs of cracking as well. Moving to domestic issues, we've had the March quarter inflation data. I mean, the quarterly inflation figures in Australia are always quite important because they usually set the tone for the
It'd be nice if we could have just stayed at the quarterly rather than go to the monthly. Now we've got to look at this thing every month, which drives me bonkers.
I know, me too, but most economists love it.
But most economists suffer from this thing, well, more is better than less. And we all know that more is not necessarily better than less. Sometimes less is better. And I think that the monthly and all this extra data has just confused us to some degree.
Yeah, and we still wait for the quarterly figures. So on the quarterly numbers over the March quarter, headline inflation was up by 0.9%, which was a bit higher than expected, 2.4% year on year. The trim mean was up by 0.7% over the quarter, also a little bit higher than economists expected, but actually in line with the RBA's forecast, and 2.9% for the trim mean. So that's finally back in the target.
That's really good.
So
in the great scheme of things.
Yeah,
where
it's
we were
great.
at the top was about 6 or 7, I think. This is the underlying.
Yeah.
Headline was about 8 at the top. So that's quite a good turnaround. And you could make an argument that if the December quarter was 0.5 and the March quarter was 0.7, if you average that out together and then annualise it, you get 2.4, which is in line with the target.
Yeah, I think that even if you look at the components of the inflation data, we're seeing a slowing in services inflation, particularly in areas that were problematic like insurance and finance. Rents have softened, although they are still high. Medical costs, all those components that looked concerning have certainly softened. I mean, I don't think it's completely like we're totally out of the woods yet on services inflation. I think there is still more room to go to get that down. But I don't think inflation is a headwind at all for another RBA rate cut. Although at the same time, the RBA may be thinking, well, we've got inflation down, the labour market's not deteriorating, growth is sort of improving. The only big downside negative is around potentially the growth outlook globally, and if we get a global trade shock and lower global growth. But I think all roads point to a rate cut in May, given the March quarter inflation data.
So you mean the RBA could sort of think, well, everything's okay, there's no need to do anything.
There's no need to do anything,
Let's just wait a little bit longer. Yeah, I admit that is a possibility. Although I tend to agree that the more likely scenario is that they think, well, particularly given what's happening globally, and we've got inflation moving down in line with their forecast, that therefore they would see scope to cut rates, particularly if they argue, as they have lately, that monetary policy is still restrictive. So you could argue there's a case to get back to wherever neutral is, providing inflation continues on this downtrend, which it probably will, and then you assess. But obviously, but bottom line is, I guess, that it's not fait accompli that they're going to cut in May. Interestingly, the money markets, I think, did have something like 150% chance of a rate cut in May, which means 100% chance of 25 and a 50% chance of another 25, in other words, to give you 50.
Yeah.
Now that's come back to about 100% chance on a cut in May, which to me still seems a little bit too high perhaps. But they've also got 4.5 cuts priced in by year end, which seems a little bit optimistic, unless you really get something going wrong big time with the tariffs, which is possible, but I could sort of see how you could get to maybe 3 or maybe 4, particularly as you go into early next year. But 4.5, and I think into next year they've got 5. So you could argue might be a bit too much. But
isn't that what usually tends to happen, that markets move too much? And that obviously those rate cut forecasts are just based on Liberation Day or the potential negatives to global growth from the Liberation Day tariffs and the potential hit to the global economy. I don't think it's really a reflection of any domestic policy settings or maybe some expectation as well that the RBA is a little bit behind the curve compared to all the other central banks.
It could be. Markets swing around and they could swing back the other way. They obviously got very concerned after Liberation Day, or Retro Day as I like to call it, because it's looking backwards rather than forwards. But in any case, we'll see. I mean, what's our view? We've got a cut in May, another cut in August, and possibly November.
Possibly another one in November.
Yeah. The other thing, of course, in the mix here is the election. And it seems that we've heard lots of promises flowing from both sides of politics.
It's hard to keep up with all the announcements.
Well, it's really hard. I mean, it's nice to have that break between Easter and Christmas. Sorry, it'd be nice to have a break between Easter and Christmas, wouldn't it? Between Easter and Anzac Day, because...
Does that mean I can take the rest of the year off?
Yeah, if it's at Easter and Christmas the whole year, that'd be nice. I'm sure a lot of Australians would like that idea. But because it all quietened down. We had 3 days and the 6 working days over that whole period, 6 normal working weekdays, 3 of them were holidays, and the politicians didn't seem to do too much in the other days. But prior to that, it seemed like one announcement after another, and you sort of wonder where the money's coming from, which gets me a little bit worried about promises. And it seems we're in a sort of a cycle in Australia where politicians think they can win by promising lots of things to the electorate.
It seems like there's more promises this time than usual.
Well, that's what I would have thought. If I go back to the 2019 election, and I, to be honest with you, I thought Labor went too far then with all the changes to the taxes, negative gearing and so on. But it seemed like a real contest between the two sides, and we had a decent debate about those sorts of things, much like we did, and this is a long time ago, in the 1993 election, where the coalition had proposed fairly radical economic reform compared to what Keating and Labor were proposing at the time. And again, we had a good debate. And we have had elections in the past. If I go back to 1987, in the middle of winter, Hawke and Keating went to the election that time offering very little in the way of increased government spending. In fact, it was soon after the Banana Republic speech, John Law's comments to John Law's at the time. And they won without really offering a lot. In fact, it was all about austerity.
But maybe people are more used to the government giving back these days, so that's why they have to keep offering. It's a virtuous cycle.
Yeah, I think we've sort of got ourselves into a bit of a cycle here, particularly after the GFC in Australia, where we in Australia didn't have a recession. This old saying that the US gets cold and we get the flu. I mean, that applied up until I was about 30. It hasn't applied ever since, so that's a long time. And I think what's happened, particularly in the time of the GFC, was that government jumped in quickly and headed off a recession here in Australia. We had one negative quarter. Pandemic, government jumped in, protected everybody. And now there's this general expectation that government is the solution to all problems and can fix things up, which arguably takes things a little bit too far in terms of too much reliance on government, which you could argue partly explains why our productivity has gone down. That if we want productivity to pick up, you've got to rely more on the private sector. We've got to give them more space. We've got to reduce regulation, do all those sorts of things. Whereas what we've seen in recent years is more a ramping up of the government sector, and politicians seem to be buying into that.
So if you run through the list of policies that Labor and the Coalition are proposing, do you see any major differences between the two? Or I guess to put another way, do you think that whoever you vote for, do you think that there's actually going to be a big impact on the economy?
Look, I don't see radical differences, no. There are differences at the margin. Labor is more sustainable energy coalition, more reliance on coal in the near term, and then ultimately nuclear, which is a big difference versus Labor. Coalition is offering less regulation, talking about deregulation. You would normally think the coalition would offer less taxes, but this time around there's not much in it. They're offering the offset, but they're talking about removing the tax cuts that Labor Party put up in the last budget. So they're not really on that side. But in the great scheme of things, if you put them side by side, they're not that different. Apart from energy policy, I'd say, is the main difference. Maybe the coalition's a bit stronger on defence, but not much. I think one's talking about 2.5% of GDP, the other's talking about 2.3%. So there's not a lot in it in terms of extra defence spending in the great scheme of things. So it's, as an economist, would we change our forecasts if there's a change of government on election day? I think no.
Maybe
what
just
do you
our
think?
immigration forecast if the coalition gets in. A bit more of a
yeah.
cut to the immigration
No, I
numbers.
forgot to mention that I think that Labor's projecting 260,000 immigrants. Coalition's talked about 160,000. So that is quite a big difference. Interestingly, that has a mix of positive and negative effects. On the one hand, it takes pressure off housing. On the other hand, it means a smaller labour force could mean upwards pressure on wages, less growth in potential GDP, for example. So it's a bit of a mixed bag.
And both parties, I think, are still proposing policies that will keep home prices elevated.
Well, that's the way I would see it. They're both offering policies to help first home buyers get into the market earlier, either with a 5% deposit as opposed to a 20% deposit, or alternatively, accessing your super or getting a tax break.
But the tax break would be for everyone, wouldn't it, for the coalition policies?
The coalition policy is that tax. Well, they've got an offset. I like to call it the low and middle income tax offset, which we used to have before. So when you fill in your tax return, you get a $1,200 rebate, I think it is. That's after the next financial year. But for first home buyers, up to a certain level of debt, you can claim your interest costs. And they estimate something like $11,000 to $12,000 per annum maximum for 5 years, so $55,000 over 5 years. Like an economist would look at that and say, well, that means the first home buyer has $55,000 extra over 5 years to spend on housing. And so therefore, in theory, it just has the effect of pushing prices up, much as accessing your super does, or getting in on a 5% deposit as opposed to a 20% deposit. That's the problem with demand-side solutions. They push up house prices. Great for old people like me, but not so good for the generation below you, the Gen Z people. So I think these things all seem very nice, but from both sides of politics, I'd just be worried that they push prices up.
But I guess the good news from all of that is if you don't know who to vote for, then whoever you vote for is probably not going to make that much of a difference to the trajectory of the economy.
I don't think it will. And when you look at the promises, both sides are saying, well, it's going to be offset by cuts here and there. Like if you look at Labor, and most of the stuff Labor's put up since January has been adopted by the coalition, or a lot of it anyway, so on Medicare and cheaper drugs and so on. Most of that was announced up to the budget and so is already in the budget. And Labor claims that what's announced since then, such as the $1,000 automatic deduction from your tax each year, or taxable income each year, they're offsetting. The cost of that is being offset by cutting back on consultants and so on. So I don't think that if Labor wins, or even if the coalition wins, we'd be undertaking big changes to our budget deficit forecast. So that's why I think it's unlikely that Australia is going to lose its AAA credit rating as a result of this.
I feel like the credit rating agencies come out every year and sort of give this warning, like we need to reduce the levels of government debt. Australia's going to be in a bit of a problem if we continue on this pathway. And I guess we've been lucky in the last few years that the economy has held up so well that it's basically helped to offset some of the growth in that debt.
Yeah.
But I don't think we should be too worried about losing the credit rating score. And even if we did, it's hard to see bond yields spiking massively from it. And Australia would still be seen as a very good investment relative to some of our global peers, because overall our levels of government debt to GDP still looks more sustainable relative to somewhere like the US or Europe.
I think that's right. I mean, it's a risk there, and they're probably right to warn of it. Politicians don't want to get carried away here with spending lots of money. So it's right to warn there could be a risk there. And I do have a nagging worry about these so-called off-budget funds.
Spending,
because that seems like a trick to spend more money without going through the budget process, but it still adds to net debt. And as one of the ratings agencies pointed out, that perhaps the better measure is the change in net debt over time. But yeah, in the great scheme of things, our level of net debt and budget deficit are a bit of a non-event compared to other countries globally. So I think the risk of losing our rating is quite low, which I guess is one reason why one can celebrate The other big reason to celebrate, I think, is that, as I heard the other day, we're one of 21 countries around the world that are true democracies. The rest are all weakening to some degree and going the other way. So, yeah, we're going through a process in Australia, which, yeah, we should be thankful for.
So go and get your democracy sausage and vote.
That's right. I have thought of voting early, but then I thought if I vote early, then I'll miss out on the Saturday fun at the election. So, I always have a chat with people and see how things are going. So, I don't know. I think it's a good thing that Australia goes through this, and that the issues in Australia are so minor compared to the issues you see in other countries, and they don't motivate people as much. That's not to say we don't have problems with housing affordability. I think we do. But compared to the issues you have in many other countries, Australia gets by pretty well, I think.
Yeah.
So anyway, I think we might wrap it up there. It's been fun. I should just point out, though, yes, we are a little bit concerned about shares in the short term. They can still have some more downside. But I think there are some positives that might kick in there. Donald Trump at some point will have to back down a lot, focus more on tax cuts and deregulation, more positive aspects of his agenda. And I think central banks globally will be cutting interest rates more. So hopefully that should see share markets heading more decisively higher by year end, even though we could still go through a rough patch in the short term. Anyway, thanks for that. Thanks, Deanna.
Thanks, Shane. See you next time.
See ya.
For more info on Shane and Deanna's podcasts and reports, head to the Insights Hub at amp.com.au.